Oh, you're so quiet, huh? Quiet until quiet.
Because can't have the music jack.
Oh, no, that's not what I mean. Because long time we never enter a room like this already.
Hello, good evening, everyone. Welcome to today's seminar. Okay, today's seminar will be a hybrid event. So we will have physical attendance here and also webinar attendance here. So just want to check the online attendance. Are you able to hear my voice loud and clear? If you can hear, please put a yes in the chat box. Okay, great. Okay, so roughly we have about 55 online attendance at the moment. Okay, so once again, I would thank everyone for spending your time, okay, or your lovely afternoon, evening here to join our webinar tonight. Okay, let's give yourself a hand of applause for putting an effort to come to attend our webinar tonight. Okay, before we start, I would like to introduce Philip Futures, our product and services to everyone. Okay, before we continue to pass on to our speaker for the content that he's going to present tonight. Okay, before I start off, just a quick disclaimer. Whatever presentation today is for education purpose only. Okay, all investment are subjected to investment risk, so you have to make your decision. You have to make your research before doing any investment decision. Okay, a bit about Philip Capital's Number Hut. Okay, we actually incorporated on 7th October 1995. We have more than 40 years of history in Malaysia now. Okay, previously we were known as Philip Futures Number Hut. So I'm sure some of you have heard of Philip Futures previously. So after we acquired our stockbroking business, we have changed our name to Philip Capital to be a more to rebrand ourselves to be a more wholesome financial house. Sorry. Okay, we also are trading participant of the Bursa Malaysia Berhad, and also a participating organization of Bursa Malaysia Securities Berhad, and also the holder of the Capital Market Service License. So what this allows us to take orders in trade in futures and also securities, which is stocks and in the stock market, and also we are fully regulated by Securities Commission. Okay, we have 11 investor center, 11 branches all over Malaysia with one research and development center. Total we have 11 and 1. Okay, so just a minute. Okay, so we have branches in Alor, Penang, Kota Damansara, Melaka, Johor, Puang, Kuantan, and in East Malaysia we have 3, which is Kota Kinabalu, Sibu, and Kuching. So we have 2 new branches in Sibu. Our 2 new branches in East Malaysia is Sibu and also Kota Kinabalu. Okay, these are some of the awards that we have won over the past 5 years. We have been consistently being an excellent broker and winning various awards. So we would like to thank all our clients for all your support. Okay, so in last year we actually the first, sorry, we are the okay, so we actually the overall best overall derivatives trading participant. Yeah, we are the best overall derivative participant, the first runner up, and also the best institutional derivative trading participant, and also the best retail derivatives trading participant. Okay. Okay, so we have offices all over the world. Okay, we have presence in France, Turkey, Dubai, India, Thailand, Indonesia, and China, Japan, Australia, Vietnam, and so on. Okay, and for Philip Capital, we offer exchanges from all around the world. Okay, we have CME Group. Okay, one of the sponsors for today. CME Group consists of few exchanges under them, which is CME, CBOT, COMEX, NYMEX. Then we also offer products from Bursa Malaysia, Singapore Exchange, ICE, Eurex, Hong Kong, and also Japanese exchange. Okay, at Phillip Futures, we strive to be one-stop trading, to be a one-stop solution for your trading. So what we offer is, okay, so our products that we offer is futures, contract for difference, and also equities. For futures, we have index futures, agriculture futures, metal futures, and energy futures, interest futures, and so on. These are some of the most of the popular products that you wish to trade, we actually covered. And also for CFD, we are offering top 100 stocks from Bursa Malaysia, and also US. US consists of NYSE and also Nasdaq stocks. And for equities, we cover Bursa Malaysia, Singapore, Hong Kong, and US. So equities is one of our new business segment. Okay, if you all wish to learn more on how to open an account for equities, you can contact your representative from each branches. And I'll explain a bit more on this later. Okay, so why we are your broker of choice? First of all, we are an award-winning broker, as mentioned earlier. We have been consistently winning. We are considered receiving awards for the past 5 years. And so we offer 24-hour brokering and execution support. So actually, this is quite important for most of our clients because some of our clients that trade in night market, you can call in and also ask for support. Okay. Then we also offer advisory service. So what advisory service means? We usually assign one representative to our client. So in case you need any recommendation, or let's say you don't know how you need coaching and so on, we actually provide that kind of service to you free of charge to all of our clients. And also we provide the latest market news. So what this latest market news cover is, we actually every morning we will send daily commentaries and weekly reports to your email. Okay, so we make sure you are well informed of the market. Then we also offer a wide array of products. So what it means is, as mentioned previously, most of our products we cover most of the market. So we cover from all type of futures. Then lastly, our account opening is online. So you can save the hassle of filling up an account opening form, or can do online for account opening, and it's free of charge. Okay, at Phillip Capital, we invite you to learn with us. So we offer free one-to-one coaching session to all our clients. Then we have free webinars such as this, and also free account opening. Okay, so what we cover in our free one-to-one coaching is that we provide basic platform coaching, fundamental analysis, technical analysis, and also a bit of product knowledge. Okay, some basic product knowledge for you to get started on how to trade futures, CFD, or equities. Okay, so for an upcoming seminar, you can find the info on the website, or you can scan this barcode. And from time to time, we also post most of our events on our social media, Facebook, Telegram, and also Instagram. Okay, so this is the link for our account opening, barcode for our account opening. Okay, so you can scan the barcode if you're interested to open an account. Okay, so let me introduce to you our trading platform. Okay, so our primary trading platform for futures is called Phillip Nova. Okay, so we have more than some of the features for this Phillip Nova. We have more than 90 technical indicators. So most of the popular indicators like MACD, RSI, moving average, all is available on Phillip Nova. And what's so special about this platform is we have one thing called the market ladder. So this market ladder will allow you to do trading technique known as the scalping. So some of the traders want to get in quick and earn a few ticks. So it allows you to get to do such trade. Okay, as compared to traditional platform where you have to open an order ticket, key in a price, and click buy and sell, which is rather slow for scalping. Okay, and other than that, there's also live market news, and also you monitor your position accordingly. Okay, then next for our CFD product, we have a platform known as the CFD Trader. Okay, this CFD Trader, we provide most of the basic features live chatting, account management, and also order type. We have a price view on this a customized watch list for you to view, and you can monitor all your order status. monitor your account position through account management, and also do your analysis for charting. Okay, so for our foreign stocks, we have recently launched a new platform known as the Points Global Malaysia (MY). Okay, so it allows you to trade US, Hong Kong, and also Singapore stocks. So these are some of the features. We have an all-in-one watch list. Okay, all-in-one, basically you can customize your watch list. You can add in the stocks that you want to trade, you want to monitor. You can add inside. Then we have charting indicators. Same, our charting indicators will cover most of the popular indicators. Just been some technical glitch here. Okay, and also we have market research. So what is market research? We gather research report from various research house, and you can view the research report at a timely manner. Once the report is published, then you are able to view it. Okay, then also you can monitor your live position accordingly. Okay, so now let me share to you what's our ongoing promotion. Okay, first of all, we will be having our Kota Kinabalu branch opening tomorrow at 9:30 a.m. Okay, so for this branch opening, we will be having a series of seminar on market outlook, on our product and services. So feel free to come and attend tomorrow, and we will have various speakers and also ribbon cutting ceremony. Okay, so come and support us. It will be starting from 9:30 tomorrow at Menara MAA. Okay, so and another promotion for our stocks is the trade shares online at 0.08%. So as this is one of the promotion for our securities. Securities means for our recently acquired security business. Okay, so it's quite competitive at 0.08%. You can trade Bursa, US, Hong Kong, Singapore market. Okay, and also for the first 100 new account openings, you will receive 100 ringgit touch and go pin. Okay. Then we have also promotion for our CFD product, which is trade at 0.03%. The normal rate is 0.5%, so we are doing discount for period from 1 August to 31st October. Okay, so what our CFD promotion covers is Bursa, NYC, and Nasdaq. Okay, lastly is our Philips Star product. Okay, so Philips Star product, this promotion is a long-term promotion from 1st January to 31st December, and it covers micro crude oil, COMEX micro gold, and also China F50, SGX China F50. Okay. Okay, so before I pass on to our David for his presentation, let me introduce a bit about him. Okay, he's actually a proprietary trader from Iceberg X, Jalan Berhad. He has wide experience in the commodity and also index market. Okay, and previously he is a derivative specialist with prominent futures broker, and also he regularly appear on newspaper, social media, and talk about the futures market. So let's give a round of applause to Mr. David.
Yeah, thank you, Trent, for a very kind introduction. So don't mind, Trent, are you able to help me with the slides?
Yeah, sure.
Because I think the pointer might be a bit off. Well, so welcome everyone. Thank you for joining physically today. And I believe I see several familiar faces. You know, I think the last round I came to KK was probably ages ago. Now I think obviously, you know, with the COVID pandemic hitting us, you know, to be frank, and a disclaimer here, this is my first physical seminar after 2.5 years. So don't mind me if I sound a bit too pushy or sound a bit too lengthy, you know, because I've been sitting on the screen for the past 2 years giving seminar. Is suddenly you change from a screen to see a normal human being interaction. That's a big jump. Yeah. So I'd just like to take this opportunity to thank Philip Futures, better known as Philip Capital, as well as CME, to invite me to today to talk on this topic, especially on palm oil and soybean oil. So just before I start, just like to get a feel of the audience for those who are present here. How many of you here actually traded the palm oil market? Can I see a show of hands? Wow, that means Philip, you got quite a tough job to do. How many of you here trade soybean oil on a CME exchange or soybean related products? Wow, also going to be even tougher job for you guys as well. So I think for those who are familiar with the local market, palm oil is always a commodity that is talked about. And being a Malaysian, so obviously you probably have chance probably traded or be in the market, whether you are trading equities, you buy plantation stocks, in a way you also is related to palm oil. Or if you are futures market, obviously you'll be trading the palm oil futures market as on the first of Malaysia. So I think it's very relevant that today we talk about the palm oil and soybean oil price dynamics, because these two commodities itself has actually witnessed tremendous price movement over this year itself. So for those who have traded in the palm oil market, you probably have seen this early part this year. I've been in the market for almost 10 years, and to see BND CPO price can hit actually above 5,000 to be is like a $1 shot, but no, as high as 8,000 ringgit per ton. That's tremendous. So for those who are trading the market, for sure, this year is going to be, it's indeed a very volatile year. Same goes for soybean oil. I think soybean oil, even though it tried to almost hit the record by years, but again, the volatility in the bean oil market is very similar to what we witnessed in the palm oil market. Next slide, please. So as usual, risk disclaimer, I think whatever I present here today is purely based on educational purpose. My opinions presented here are purely my own. It doesn't represent opinion by the exchange or by the broker. And again, dabbling in futures or any derivative types of instrument involve risk. So make sure you do consult your licensed representative. I believe Philip Capital representative, they are more than able to guide you through, especially if you are new to the futures market. Next slide, please. So in the next 1 hour or so, probably, we will cover these are a few things that we're probably going to touch. I think the first thing first, if you are in the palm oil market, obviously you want to know where price is going to go. I can tell you it's very challenging at this point in time to be trading in the market. There's a couple of reasons, there's several reasons to it. But most important thing is that, being a trader in the market, especially for palm oil market, for the past several years, I think it's important for us to also assess sometimes commodities, it does rely to a certain extent fundamentals. Regardless whether you always think that fundamental doesn't really pain in the prices, but nevertheless there is always a reason a particular price be trading at a certain range. There's a reason to it, and we can closely associate this particular reason to fundamentals. So therefore, I think it's great for me to start off with fundamentals of the market, how I see the palm oil fundamental as it is. So for those who, I'm not sure whether you attended the POC event, which is just concluded in KK. Obviously, after what we've seen over the past 2 days, we've seen a lot of mixed views that's in the market, but ultimately they are bearish. Most of the people, or rather the general sentiment in the market, is still bearish. So let's see, whether it's what we're going to be seeing in the market for the next couple of months or so. Now, so if you just look at this chart that I presented here, it's interesting to watch. First thing first, this is taken over since back in 2000. So that's over 20 years history price in CPO market. One thing you need to take note is that, one conclusion is price can no longer go back to below 2,000 ringgit for a simple fact that your production cost is no longer cheap. I'm not sure whether some of you here are involved in plantation, but trust me, your cost every year is escalating. It's very difficult, for palm oil price to fall below the cost of production. So if you notice over the past 20 years or so, the cost of producing palm oil has actually increased tremendously. So in a way, it gives you a bit of comfort. If the price falls down, you at the back of your mind, you'll be thinking, okay, you can't fall below a certain price because that possibly could be the floor or the cost of producing a palm oil. But if you just look at this chart that I have here, even though given the rise of prices over the past 20 years, 2022 is the year to be reckoned with. why is that so? Very simple. If you just look at the chart, CPO created history in 2022. So those who are trading the CPO market, you should give yourself a clap of hand because you just witnessed history. We have hit 8,000 ringgit per ton. I'm not sure those who are trading the market. I think when I was trading the market during the time, it was one part exciting, and I had sleepless nights. The reason because sleepless nights is because the news flow is just too erratic, and we are in a point of history. So really, I think if you are in the palm oil market, this year is indeed a very volatile year. And surprisingly enough, just 3 months only, I think it took 3 months to correct at least 5,000 ringgit per ton on the CPO market itself. So it goes to show you that, really, I think this year, if it's not exciting enough for you as a product, I have nothing much to say because, really, palm oil price now, if you compare to the peak, it's actually down by almost more than 50%. Next slide, please. Now, I think there's a couple of reasons that drive, first thing first, why palm oil price has been so strong recently. First thing is because Ukraine-Russia conflict is one thing. Second thing, if you just look at the fundamentals itself, the production of palm oil has actually been very sluggish. It's actually not last 2 years to witness production start to come down. In fact, if you compare Malaysia production over the past couple of years, it's actually been very bad. One can attribute probably because there's not much of replanting activities, some planters decided not to not to replant because of cost, and because of that, we start to see that the yield starts to drop over the years. So Malaysia production is actually quite bad, and Indonesia it's not only Malaysia, Indonesia is also suffering the same thing. And with that, you can clearly see once you have the Ukraine-Russia conflict, it aggravated the problem. And now 2022 is also another interesting year. Reason being is because if you look at your general food prices, just go for a simple teh tarik. I'm from KL. Back in January, teh tarik will only cost you 3 ringgit. Now, if it costs you probably 350 or sometimes 4, I know some of you like surprised, right? That's KL price. I'm not sure about KK. Hopefully, it's not the same. But anyway, inflation is real, and clearly you can clearly see that 2022 is a year where we start to see commodity prices take a big jump, and it's not only in palm oil. You look at crude oil, for example. Now, crude oil, it has witnessed tremendous improvement. Back in 2020, at the start of the pandemic, who has ever noticed a negative price on a commodity? It did happen in crude oil. So we can't really discount, or we can't discount the impossibility. It's possible. Now, if you just look at crude oil itself, it's back to 80 or 100 on the WTI. So it goes to show you that commodities prices are rising, and therefore it actually causes inflation. Now, as if you just look at the news, Bloomberg, whichever news portal you're in, what's the key thing they always say? Interest rate. And when interest rates start to rise, because as a way to fight inflation, that's where it hurts your economic growth. So really, I think the major theme as we go towards the end of 2022 and going into beyond 2023, inflation is still being watched, interest rate is still being watched. And why is this important? Because it affects all commodities, and palm oil is no exception. If you just look at how the performance of palm oil has been for the past couple of months before, it's really in line with the regional money flow that's happening. So I think if you are trading the palm oil market, be on the lookout, especially with rising inflation and interest rates. So this is just to show you, I think inflation is pushing a lot of central banks to hike interest rates, and interest rates as a result will definitely hurt growth. So if you just look at it, US as a market itself is hiking interest rates. I think they're going to fight this as aggressive as they can. Discount the growth, they don't care about the growth, they just want to hike interest rates as a way to contain inflation. And it's not only US, you just look at other countries, developed countries especially, UK the same, Europe the same. So what this tells you, I think we are going into a period where economic growth is going to slow down as a result of higher interest rates. So that's where, whether you are trading whichever market you're in, we have to be very careful with the news flow that's coming up, because eventually this will have an impact on prices. Next slide, please. So with that in mind, I think it's very clear. There's nothing, I think nothing much to add. The economy as a whole around the region, around globally, is heading to a possible recession. In fact, I think certain countries are heading into a recession as we speak. And if you just look at this chart on the left is showing Korea. The reason I put up is quite interesting in the sense that if you just look at Korea performance of late, why Korea? Because this particular country export a lot of semiconductor. And you want to know the growth of the global economy, just look at Korea. Because the moment you have less Apple demand, less computer demand, that's it. That tells you consumer are not spending. When that happens, that tells you the economy is slowing. So generally, if you want to know the health of the global economy, one way is just look at Korea. As long as Korea continue to push in good numbers, that means it's growing. But it's not, that means the global economy is going to hit on the possible downturn. Now, on the right is basically money flow. Very interestingly, with high interest rate, very simple. There's not much money flowing into the system because a lot of central banks are pulling back into the money back into the central bank. As a result, the money shrink. Once money shrink, a lot of asset classes are affected. So in a way, commodities are also being affected. Next slide, please. Now, so basically coming back into where we are, commodities as a whole, I think it's interesting to watch, a lot of, if you just look at what forecast has been, or what the major forecaster has been looking at, vegetable oil itself, palm oil is a vegetable oil. And being a vegetable oil, the stocks of vegetable oil around the world is tight. So there's no reason for prices to come down that low. But if you just look at, based on the facts that we gather, the world oil seed in terms of the ending stocks ratio is still pretty high. That means despite people claiming that stocks are low, there's certain pockets of available stocks that's in the market. And because of this, there is still enough supply to meet demand. So therefore, prices will still tend to adjust on the downside. Now, this is based on LMC forecast. They are one of the portfolio of very good data in terms of understanding the global dynamics when it comes to vegetable oil. Even they have said, output is not fast enough to meet demand in the future. But this is a longer term picture. On a short term basis, with the global economy heading to a possible slowdown, demand is going to get affected. That's where it's going to be pushing down prices. Next slide, please. So palm oil. I think palm oil is very interesting when it comes to fundamentals. Now, if you are trading the palm oil space for a period of time, you notice that palm oil being a commodity is still very seasonal, and it tends to display certain seasonal tendencies. So if you just look at the chart on the left, it shows you the production from January to December for the past 15 years. If you, for the audience here, can you tell me, in terms of production period for palm oil, which is likely peak for CPO production? If you just look at the past 15 years, production tends to peak around October, November. And we are just a couple of months away, or probably a couple of weeks away from November. That's where usually production, historically speaking, is going to peak. Now, again, things can change. It could be the weather, it could be any other factors. So whether history will repeat is another question. But if just based on historical basis, it does give you a bit of indication that the production palm oil is going to peak very soon. And the production start to peak, it's very simple. I think going forward, we may start to see production start to come down. When you start to see production starts to come down, simple, basic economics. When supply comes down, demand stays flat, what happens to your price? Is it going to come down or up? So that's where I think it's important for us to take note. I think in terms of palm oil itself, there is a bit of seasonality. And if you just look at the past 15 years, production tends to peak around the beginning of November. Now, sorry, just a slide before. If you just look at the chart on the right, it shows you prices and your production level. Notice this, whenever you have high production, that tells you generally the prices will not go up much. And when you have low production, generally prices will tend to stay very strong. So that's a simple relationship that you can gather. Next slide, please. So that's production. Another key variable when you look at palm oil is the stock levels. Now, If you have been following the news, especially when trading the palm oil market, you notice that Malaysia's stock levels has actually been climbing up very rapidly over the past 2 years. But then, because of COVID-19 pandemic, production affected badly, stock levels starts to decline. In over the past 10 years, if you just look at the stock trend itself, Malaysia's stock has not breached below the 2 million mark. But last 2 years, especially last year, it breached below the 2 million mark. Actually, why the 2 million mark is so relevant is because if you just look at the history, the 2 million mark is always well observed. As long as the market is above the 2 million mark in terms of stock levels, that means the market is well supplied. But the moment it falls below the 2 million mark, that tells you the market is tight. And keep in mind, last year, 2021, there's a couple of months, in fact, I think there's 3 to 4 months where production or where the stock levels of Malaysia palm oil falls below the 2 million mark and stays there for at least 4 months consecutively. So that tells you one thing. If stock levels are low and production is not going up as much as they can, what will tell you in terms of price? So in a way, it's giving you a bit of support when it comes to prices. So here you just look at it, the orange line is prices, the blue line is your stock levels. Notice this, last 2 or 3 months, MPOB reported higher stocks. Once that happened, look at the price. It adjusted rapidly. So I think that's what we are seeing right now. It's going to be a question whereby, since now we are above the 2 million again, are we going to see consecutive next couple of months stock levels to remain 2 million? If that's the case, very likely it's going to be a very bad situation for the palm oil market. Next slide, please. Now, we always like to compare with Indonesia when it comes to palm oil because Malaysia we used to claim to be the biggest producer back in the early 1990s, and unfortunately we lost that status back in early 2000 with Indonesia approaching to be number 1. You can clearly see that Malaysia's stock situation, you always scream whenever it goes above 2 million, you always scream, oh, it's oversupply, it's oversupply. But look at Indonesia. Their normal stock levels are easily 3 to 4 million. So we are screaming 2 million, you're always screaming, wow, it's definitely a bearish market. But on the other side of the island, you really look at Indonesia. Indonesia's stock levels, I think last year was a historical high. So it goes to tell you that Indonesia has no choice. With the high stock levels that they have in the country, they have to bring it down. And therefore, they really have to keep selling their palm oil that they have over to the external market. So as a result, palm oil price came down as a result of adjustment. Next slide, please. Now, so that's on production and stocks. Next on demand. If you just look at Malaysia's CPU export, there's nothing much to shout out about. The demand for this year, I'm not sure why, but it's just that the demand is not fast enough to pick up. That's why the stock is slowly, gradually building up in Malaysia. Indonesia is interesting. Reason being, if you recall, early part of this year, because of the Ukraine-Russia conflict, they decided to impose a ban. The largest country to produce palm oil, when they announced that they're going to ban palm oil, that's it. That's why prices fly to as high as 7,000 or 8,000 ringgit. But I think they got it wrong because the moment they put a ban on it, they noticed that the domestic supplies are building up as fast as they can. So therefore, you just look at it, the stock levels in Indonesia, I think it climbed to as high as 7 to 8 million, which is a lot. So as a result, they noticed that they did a wrong policy. They quickly reversed that policy. And with that, I think Indonesia has no choice but to quickly export out whatever palm oil they have and to reverse the ban that they did earlier this year. So I think Indonesia, going forward, is going to give a lot of competition to Malaysia when it comes to palm oil exports. As a result, it's really pushing down the market in terms of prices. Next. So you can clearly see, I think China and India, why Malaysia palm oil in terms of demand is actually quite sluggish is because China is our biggest customer and India, second largest. China is not demanding more. And if you ask me honestly, will China continue to have a COVID zero policy? It's a very strict policy, but if they continue to do that, it's going to hurt their economy because once you have cases start to flare, you have lockdown. Once you have lockdown, demand is going to collapse. So if you are trading the market, China demand is so erratic at this point in time, it's very difficult for us to gauge the demand of palm oil in the next couple of weeks, because if China continue to have a zero COVID policy, it's going to have a big impact on the market. India, on the other hand, I think, with Indonesia trying to aggressively try to sell their stocks, they're willing to push down the discount for their particular CPO price. As a result, India definitely is going to go for Indonesia in terms of the palm oil demand. So therefore, I think you can see Malaysia palm oil exports to India is actually quite flat, on a yearly basis. Next. Now, the funny thing is that, China, despite, demand buying less palm oil this year, but if you look at their stock levels is actually very low compared to year-to-year basis. This is very unusual. So what this tells you is that China is not buying more, but they have low stocks. So if anything happens, that's it. They have not enough palm oil to cover. And what would they do by then? They have to quickly buy from the open market. So if you have been following the news over the past couple of weeks, I think last 2 or 3 weeks, I think China has been buying a lot more of palm oil because the stock levels is just way too low. Now, India is again very seasonal. Why I say seasonal? If you notice around June, July period, the stock levels of palm oil in India starts to climb. So that tells you, as India goes into Deepawali is coming end of next week or so, usually they'll buy a lot of palm oil to keep. So you can clearly see, I think this is a pattern that they've been doing for India for a long period of time. So you notice around August, September is a period where India will start buying a lot more. So these are all seasonals. So when it comes to trading palm oil or looking at the market itself, there's certain tendencies that you can get based on historical pattern in the market. Next. Now, so that's on demand and supply dynamics. Now, if you trade palm oil price, if you look at palm oil price, there's a lot of external factors that's also influencing the market. One, be it the crude oil market. Now, all these are commodities, and commodities are always in tune. So when crude oil starts to come down, normally, generally, you start to see other commodities start to come down. For example, you look at, just go back home and look at bean oil, soybean oil, and crude oil chart. You can clearly see that once crude oil starts to go lower, all these commodities will start to follow suit. So same goes for palm oil. Palm oil, in a way, is very relatable to crude oil, is because palm oil is used as a feedstock for biodiesel. Okay, so biodiesel is basically, where you blend palm oil with diesel as a way for you to take out a bit of palm oil from the market, and also save costs. So Indonesia, they love biodiesel because Indonesia is a net importer of crude oil. Malaysia, we are very fortunate. Malaysia, we are fortunate in the sense that we don't have to import our crude oil. We got Petronas. As long as Petronas keep pumping, for sure we have abundant of supply. But Indonesia is slightly different. Their economy relies a lot on crude oil import. So as a result, they import a lot of crude oil, and once crude oil price starts to rise, their budget will be difficult to balance. So Indonesia has more incentive. Whenever crude oil price is high, they have to blend palm oil with diesel as a way to soften their budget flow. So that's why crude oil and CPO market is quite interrelated. So if you look at this chart, the orange line is basically your CPO price, and your blue line is your WTI. And if you take the relationship, you look at whenever crude oil price is down, CPO generally will come down. So that's how the interdependence between both commodities. Next. Now I'm not going to go too deep on this spread. I think basically, this is what the market participants always look at, especially those biofuel producers. They always look at comparing palm oil with gas oil spread. Basically, look at the price of palm oil and against the price of gas oil. And the moment when they have big discount, like palm oil is a big discount to gas oil, which means that palm oil is very cheap compared to gas oil, which is what you're seeing right now. So anything prices below that particular red line, it tells you that palm oil is cheap. So what happens when palm oil is cheap? When palm oil is cheap, that means the biodiesel producers has more incentive to blend your palm oil together with diesel as a way to produce more biofuel, because there's more incentive for the producers. But the moment when we go above the red line, that means it's more expensive. So right now is a very good situation for the palm oil market. Why? Because if you just look at palm oil price and the crude oil market, the crude oil price, there's a lot of big discount for the palm oil market. So in a way, it's supposed to give a bit of support because these are all additional demand. So if you just look at in totality, especially when you look at the energy space, the palm oil and gas oil spread should be a good beneficial factor for the palm oil market in the medium term. But we are not seeing that. So again, it's a very peculiar market. There's other external forces which is more important at this point in time. Next. So these are all biodiesel policies which is conducted by Indonesia. Now the funny thing about Indonesia is that the government policies tend to change. There's one thing that if you are observing the market, you have to be very meticulous when it comes to understanding what Indonesia government will do, because there's a lot of policy U-turn and it's all of a sudden. So we've seen that in early of this year, we saw the ban in the palm oil market. After that, they reversed that after probably a period of 4 weeks. Then again, there's other couple of policies. So Indonesia is very, I would say they are a bit more, quite sensitive to prices, and therefore they tend to make policies based on that. And therefore it creates a lot of chaos in the market. If you want certainty in Indonesia government action, I think it's very difficult. But having said that, they are very aggressive in terms of their biodiesel mandate. So right now they are looking at about B35. I think Malaysia is only B7. There's a big gap. But again, for Malaysia, there's no incentive for us to use biodiesel because we got abundant of crude oil. So it's a different scenario. But why this is important, because if Indonesia continue to implement higher percentage of palm oil into their diesel, that means they need more palm oil. And as a result, these are all price supportive at the end of the day. Next. Now, comes to a favorite factor among the Malaysians. If you notice, ringgit has always been a crucial factor when it comes to commodity play, be it whether it's a crude oil or even CPO. In fact, if you just look at ringgit performance of late, you notice that the weakening of the ringgit is causing a lot of trouble in the palm oil market, in a sense that weaker ringgit is in line with weaker CPO prices. Now, the funny thing is that when you have weaker ringgit, normally it's beneficial for price, because if let's say I'm a US dollar importer, the moment when I demand or I buy a ringgit product, when ringgit gets weaker, I can buy more. But that's not the case here. What we're seeing right now is that the weaker ringgit is actually aggravating the fall in the palm oil price. So going forward, it's interesting to watch as ringgit continues to go weaker, whether the extra demand because of the currency factor will start to kick in. I believe if you ask me, my opinion is basically, I think with the weaker ringgit that we're seeing right now, whether what level you're probably be thinking of, but the weaker ringgit should be able to contribute to higher demand going forward. Because if you look at just the ringgit play, when you have a currency that probably decline like close to 10%, that means there's 10% additional gain, if you are converting to US dollar for the other party. So in a sense that should be contributing to higher demand. We have not seen that, but yet to be seen. So as ringgit continue to stay weak, that should create additional demand when it comes to the currency play. Next. Now, I always like to compare prices when it comes to trading commodities, in a sense that, if you compare the past couple of years of CPO prices, over the past, I think, if I'm not mistaken, I've taken the data since 1990s. So it's quite a pretty long historical data. And if you compare the performance month-to-month basis, you notice one thing. If you look at production, you look at stock levels, especially production, it tends to display seasonal pattern. So if you recall back in the earlier slide, production tend to peak around November. So that's where prices tend to be a bit more supported. So if you just look at this table, red normally means that the month-to-month change is negative. Green indicates the month-to-month change is positive. So if you just look at this chart itself, you can clearly see that which particular month is good to trade on the long side for CPO market. Normally, it's usually around October, November period. And that's where you start to see prices tend to be stronger. Now, if you just look at November itself, out of, I think, 30 years, there's only 2 or 3 incidents where, the prices changes negative for the particular month. But over the rest 20 years, it's all been positive. So what this tells you is simple. As we are approaching to year end, so year end is where prices tend to be stronger, seasonality. So that's where, as a result, if you want to take a view, you want to take a position, you can use this tool as a way to guide this, I would say, historical tendencies. Because there's a period of time where prices tend to be stronger, and there's a period of time where prices tend to be weaker. Okay, next. Now, as a trader, we trade not only on the outright contract itself. For those who are not familiar, what outright contract is and what is a spread contract. So spread, basically, what I'm showing here is a calendar spread on the palm oil market. It's basically taking position in 2 different months. So what I'm comparing here is basically a December contract and a January contract. There's a spread, there's a difference. Whenever there's a positive difference, that means the December contract is trading at a much higher price compared to January. That's why it's positive spread. Now, what happens if a negative spread? Is December trading higher or lower compared to January? Anyone want to take a guess? So in a positive spread, calendar spread, the December contract is trading higher price compared to January. Now, what happens if it's a negative spread? Is December contract trading at a higher price compared to January? Anyone of you say December, in a negative spread, December is higher? In a negative spread, December is lower. Who says December is lower? Yeah. So negative spread, January, December is lower than January. Now, the reason I want to highlight this is simple. In a positive spread market, for this, let's say I'm taking this as an example, that tells you the December contract, which is a nearer contract, and January contract is a further month contract, is trading at a higher price. That means there's demand for the particular month. Okay? Hope you go along with me. Okay? And when it's a negative spread, which means that December contract is trading at a much lower price compared to January, what this tells you? People don't want to demand January. People don't want to demand December. They want to buy January. In fact, they're selling December. That's why December contract is trading lower. Now, this positive, negative, it can be confusing. But what is important to take note here is that the change. You see the market back in early April, early March. The market was trading at a positive spread, which means that generally the market is very bullish because December is trading higher. Now, notice the change back in late June, early July. So from a positive spread, it went over to a negative spread. So that tells you generally the market is bullish or bearish. Bearish, because the near month contract in December is trading lower. So why is this important? It tells you the sentiment of market has changed, the trend of market has changed. So hopefully you are able to understand this because this will guide you in future where the possible sentiment of market is. It may not be December, January. This is an example. You can obviously look at January, February, or February, March, depending on the calendar that you're looking at. Okay, next. Now, I'm not going to go too deep on the fancy terms. What's a contango, backwardation? You can obviously research that on Google. But what's important to take note is that the curve. I want to show you the curve because normally I've seen over the past few years is that the moment when the forward curve very simple. You take the prices that's listed on the Bursa exchange, all the different contract months. You just put down the price, you plot it on an Excel, and you get a forward curve. Now, you can clearly see based on this, the first few months, the earlier of the month is always lower than the next 3 or 6 months. That's why the curve is upward sloping. Now, in this market, we always call about contango market, okay, which is very unusual. That means the front month is usually very bad, and the far month is usually very good. Now, what's important to take note is that when the curve starts to get flat, where each month the changes between the intermonths are small, that's usually indicate there's a change in trend. And watch out for the next couple of weeks or months. The moment the forward curve starts to get flat, that tells you that generally the market may change to a proper trend. Maybe it's from a bearish to bullish or from a bullish to bearish. So forward curve can tell you a lot of picture. So this is one thing I hope you guys are able to get it, because by understanding this, you can get a better picture of where the overall market sentiment is at this point in time. Okay, next. Now, this is basically plotting calendar spread of different months. So you got like the December, January, February, Feb, March, April, and whatnot, and so on. Again, you notice that the front month, especially the December, January, February, March, are mostly in negative. But take a note that especially those starting from April, May, June, July, August, they are still positive. Now, eventually, whether this curve will turn, it will come, but it's a matter of time. So what this tells you is that it's important to watch out the front month, especially December, January, February, and February, March. Once those calendar spread starts to change, that tells you the fundamental is changing. So like you point back to the earlier first slide I showed you on production, we are going into a peak production period. So once production starts to come down, stock levels eventually will come down, then probably you'll see the front month tend to adjust. So that's where, it gives you a bit of leverage by understanding the dynamics of it, but it also points you where is a possible market sentiment is at a particular point in time. Next. Now, so that's on a couple of factors that's affecting palm oil prices and why palm oil prices has been staying so high. I just want to talk about soybean oil, because if you have watched the spread between the palm oil to soybean oil, is again very interesting. So not only palm oil hit a historical high, the spread between palm oil to soybean oil also hit a historical high. The highest we have seen is about $600 US. Right now, it's doing about $650 US. It's very high at this point in time. Now, whether this spread will continue, eventually, like all spread, it will tend to revert back to its original mean. Historically, the mean or the average for this spread is about 150 to 200 US dollar. So right now, 650 is actually very high. Eventually, it will adjust. So how can it adjust? Very simple. Two things can happen. First thing is palm oil have to catch up, because $600 US is a discount. That means palm oil is trading at a way major discount compared to bean oil. Or bean oil will have to adjust on the downside, because bean oil is relatively more expensive at this point in time. That's why the spread you're seeing right now is historical high. Eventually, if you are trading on a spread, it would revert. It's a matter of time. So again, really the market can stay at this point for a long period before it can revert back to its original mean. So this is something that, a lot of traders, they tend to make a mistake whereby, spread up this high, good opportunity. That's not the case. Because the moment the market can stay at this spread as high as it can for a long period, that's where it tends to confuse you. So as a result, really, it's something for us to really watch out whether the spread itself will mean revert back to its original level. Next. Now, since we talk about bean oil, I think it's good for me to touch a little bit on the soybean oil perspective. Now, the world soybean oil usage itself is actually, everything looks good. Demand and supply fundamentals is excellent. Why? First thing, production of soybean this year is projected to be lower because the South American, just to give you a background, if you're trading the soybean market, the South American are fighting with the US when it comes to who is the dominant supplier to China. China is the largest consumer of soybean. They need it because you talk about consumption of meat, they need it for poultry, they need beans. So if China is the largest customer, who is supplying? US and the South American guys. So the key question is, who's going to win the battle? It's still too early to tell. Now US is going into harvest season, so any weather pattern that can change the cycle, you can see prices start to fly. So importantly, I think what we need to take note is that when it comes to fundamentals of soybean, especially soybean oil, it looks good because stock levels are low, production is actually looking quite bad, and consumption still remain very high. So if you look at it, there's no reason for prices to come down. That's why the spread for palm oil to soybean oil has been that high for a long period. And this is where a lot of people get it mistaken all the time. They thought that, oh, this adjustment can be very fast. Yes, it can be fast, but that involves two things. One thing is whether bean oil can come down as fast or palm oil goes up as fast as they can. Okay, next. Now, I'm not going to go too much on the soybean fundamentals, but what it tells you is that I think based on the outlook, the demand for soybean continues to do well. Sorry, let me rephrase. Not to say too well this year, but fair enough. If you just look at the chart on the left, the black line is basically to show the US exports so far in the past 2 weeks, because now it's the exporting season for US when it comes to soybean. You notice that even though it's going up, but it's still lagging the last couple of years. So crucial to watch next couple of weeks. If you are trading a soybean market, every week from now, they'll show you the US exports to China. The moment the figure starts to go a bit negative, you start to see prices adjust. So if you are trading bean oil market or beans in particular, one thing you need to take note is that it's unlike trading palm oil. You don't have reports out, MPOB only out once a month. But if you are trading on the bean market, on the CME exchange, you notice that every week you have data. And usually when the data is out, normally it's going to be priced, it's going to affect prices. Okay, next. Now, so again, everything goes back to China. Same goes to the palm oil story. It goes back to China. China, because it's the biggest customer, and the moment in China starts to slow down, normally the demand for these commodities will start to slow down. Okay, next. So now if you are trading on bean market, you need to take note. The moment crush margin is basically, there is a ratio. You can always research this. And to get all this right, you can actually go to CME website. They have tremendous resources to help you understand how the market is being observed and being watched. Now, if you are trading the bean market, a lot of people is looking at crush margins. Crush margins basically tells you, if the margins is positive, it's good for me to crush. So there's more demand for soybean. And when the margins are negative, that means there's no point for me to crush the bean because there's no money for me to make. Right now, the margins are negative because you look at meal prices, you look at bean oil prices, they're all relatively to soybean is high. So as a result, the margin is negative. So therefore, there's not much demand for it. And when crush margins are negative, it will definitely affect demand. That's what you're seeing right now. So going forward, I think margin will still continue to stay negative. And that's where, if you're trading the bean oil market of beans, you have to be aware of. Next. Now, this is interesting. So on the left, we have palm oil, the forward curve, which I tell you just take all the different months, you just plot it on an Excel sheet, you get this. And on the right is your bean oil. What's the difference? Can anyone tell me? If you take the left portion, which is palm oil market, you notice that the forward curve is upward sloping. That means the farm prices are higher. But the chart on the right, which is your bean oil market, the farm prices are lower. Why is that so? Two different markets here, two different structures, which is very unusual. That is why the palm oil to soybean oil spread has been staying so high. Normally, if you watch this spread, it will come down very fast, but not this time. Why is that so? Now, palm oil upward sloping means that the front month, whether it's December, January contract, is trading lower compared to next year, February or March contract. Why? The market is still expecting supply is there, demand may not be there, stock is going to go up. So I rather sell the December or January contract and will not sell next year. That is why the curve is upward sloping. Now, bean oil is different. Bean oil, if you just look at the contract, the near-month contract is trading much higher compared to farm oil. So what this tells you is that once the market goes next couple of weeks or months, the supply should come in. And the current supply in the bean oil market is tight. That is why the curve is like this. So if you are trading on a spread, you're hoping it to come down. How can it come down when the structure is like that? So that is why it's important for us to look at structure, because the moment this structure change, that means the sentiment has changed. And that is where opportunity comes in the market. Next. Now, technical wise, again, this is a very interesting. When I trade, I'm usually classified as a trend trader. I trade with the trend. I don't trade against the trend, because trading against the trend, very tough business to be in. You trade with the trend, you get less risk. You face less resistance. Now, one way to look at trend, there's a lot of ways. One way is to look at it visually. Another way is to plot at moving average. Or another way is to use what I call a Heiken-Ashi. How many of you here have heard before Heiken-Ashi candles? Okay, only one. Now, Heiken-Ashi candles are like Japanese candlesticks. In fact, they're used from Japanese candlesticks. Now, the reason why Heiken-Ashi is used more often when it comes to trend, because it highlights the trend clearer. Japanese candlesticks doesn't highlight the trend very clearly. In fact, it shows a lot of weak stop. Very simple. The moment you see a red candle on Heiken-Ashi, that tells you generally is a downtrend. A green candle, that generally tells you is an uptrend. So right now, you just look at where the market is. This is for palm oil market. The last 2 days, it shows you a possible uptrend that's in place. Probably a short-term rally, we won't know. But the short-term wise, there's a possible bullishness in the market because of the green Heiken-Ashi candle. Now, these are all daily chart. So obviously, you can play around with the time frame. But what's important is that using Heiken-Ashi can help us to identify what are the trend on the market at that point in time. It's easier for the eye to see. Now, the bottom panel is what I call ADX indicator. It's also again for trend trading. So ADX is mainly used the moment you have high ADX number, that tells you the trend is in place. For example, if ADX is pointing you above 20, that generally tells you there's a trend coming. But the moment ADX starts to fall, that generally tells you the market is actually coming down. There's no trend, probably from a trend market to a sideways market. So whatever strategy I'm showing you here is useful for trend trading, not for sideways or market ranging. That one you have to use a different type of strategy. So if you just look at where palm oil is right now, the 4,000 is psychological level. I find it's difficult to break at this point in time because a lot of people are expecting the market to be bearish. But having said that, as we move along the next couple of months, production starts to slow down, stock levels starts to possibly come down. That's where, possibly it can retest the 4,000 psychological resistance again. Okay, next. Now, soybean oil is interesting in the sense that you look at the plunge in palm oil and you compare to soybean oil, it's like 2 different worlds. Palm oil is completely lost all its gain, whatever it gained for the whole year, but bean oil probably give back only a fraction. And if you look at where bean oil is, bean oil, although it's still trading below the 200 period EMA, which is a very good indication of where the market is, as long as prices are trading below the 200 period EMA, that means the market is on a downtrend. And if you just look at where prices is right now, relatively to where the 200 period EMA is still trading below that line. So that tells you that generally the market is still on downtrend. But crucially to watch, if bean oil can break the 68 level, that means bean oil is going to hit for a possible uptrend again. Is that possible? I think given the sluggishness, the bearishness in the palm oil market and the spread so big, it's very difficult because you need palm oil to go up along. If palm oil doesn't go up along, it's very difficult for bean oil to go up as well. Okay, next. So coming to pretty much the end of my webinar, I think first thing is if you're looking about risk factors when it comes to both the markets, especially for palm oil, in fact, I think one thing that has to be clear is that production is a key factor. If productions continue to stay higher, stocks is going to go up. There's no reason for prices to go up. So that's one thing we have to take note. Second thing, crude oil trend is very dominant. If you are trading palm oil or bean oil, as a matter of fact, both these commodities are affected by crude oil. So as long as crude oil stay where it is, there is chance. There's hope that palm oil can find a bit of support. But the moment crude oil starts to weaken, you probably can expect the same for palm oil as well as bean oil. Now, weather, I hardly touch on weather in this topic because predicting weather and forecasting weather is a tough job. Even the best weather forecaster can get it wrong. But weather is an important play because weather can change the whole dynamics of it. For example, right now it's harvest season in the US. The moment any cyclone come and hit the harvest area, that's it. You can see bean prices start to vary. So that's where we really need to be careful. But again, weather is unpredictable. I'm not sure whether it's global warming or whatnot, but again, I think this is the factor we have to watch out. Now, besides, if you just look at palm oil itself, soybean oil need to be looked at closely and observe and watch because these two products are interrelated. So whenever you see high palm oil prices, normally you can expect high soybean oil prices as well. The last two risks, economic slowdown, this is the biggest risk of all. How is that going to affect the market? Is really down to how much it's going to have an impact on demand. That's what we're seeing right now. Looks like it has an impact. But really going forward, how big our impact is, especially 2023, is much to be seen. But as long as you're heading for a slowdown, it's definitely going to be bad for prices next year. That's why, if you just look at what some of the market forecasts today, it clearly states that next year is going to be very volatile. In fact, it's going to be worse when it comes to sentiment compared to this year. Geopolitics is something that is very tough to observe, but this is definitely going to affect news flow. So that's what we're seeing. The reason why palm oil price can go up to where it is back in early March is because of geopolitical Ukraine-Russia conflict. Without that, I don't think palm oil price can go up to 7,000 or 8,000. So that's where again geopolitics can come into the picture and can affect the whole dynamics of it. Next, I think I have one last slide. So I'm just going to end it here from the great saying of Master Yoda, may the force be with you. So if you are trading the market, all the best, and enjoy the ride of volatility. So over to you, friend. So how are we going to do this? We take questions from the floor first or from the online audience? Okay, why not we start with the audience here? Give them the advantage. Any questions you have from the physical audience?
Maybe there's one question here.
Oh, sure. Sorry, this gentleman, there's a question. Yeah, go ahead. Yeah.
2005 on the top price. Why do you look at the crude oil? Why can go to the negative level?
Yeah. Okay, that's a very good question. So for the online audience, the gentleman is asking, crude oil. I did mention CPO cannot fall below 2000 or 2005 because of cost of production. Why crude oil? For the matter of fact, went below negative prices. Now, let me do highlight that the crude oil situation is slightly different. Despite the cost of producing, it went way below the cost of producing a barrel of crude oil. The fact is that if you just look closely at that point in time, really it's a matter of the spot market at that point in time. If you look at how the negative prices arises, where there's short of liquidity in the market, and really I think a lot of people are just selling, and there's no single buyer. So therefore, it's a willing buyer, willing seller, and therefore the market actually transacted at a negative price. Now, would that happen in palm oil market? I won't discount that, but it's very tough. Now, the market functions as a market as it is. You must have a willing buyer and a willing seller. If you don't have a willing buyer and a willing seller, you have to transact at a better price where both of these parties can meet. That's unfortunately happened in crude oil market, which they meet at way below the cost of producing. Now, I think in normal circumstances, it's unlikely to happen, but we can't discount that. So hopefully I answer the question from the audience. Okay,
Okay, there's one
online.
question from offline. Oh, sorry. So you want to go first?
Yeah, sure.
Actually, I just want to ask, during the time when I think the futures for crude oil was in negative territory, right? Can we actually buy a long contract during that time?
Okay. So the question from the audience, the gentleman here is that, during the negative price episode in crude oil, can the market participant participate in the crude oil by buying into negative price? Now, at that point in time, if you notice, it was a spot contract. It was close to physical settlement. So for a normal retailer, I don't think you have open access to that. Your broker wouldn't even allow you to touch that particular contract. So I would say, it's very difficult for you to capture that kind of opportunity. It's not open for the normal participants in the market. It's really for, because at that time the spot market, those who are in the having storage or whatever in the market at that point in time, they're willing to transact at a price which is it doesn't make sense. So for a normal retailer, it's very difficult for you to be capturing that kind of opportunity. Yeah. Okay. Right.
Yeah, one more question.
Sure. Yeah.
So is there crude oil and palm oil come in tandem?
Yeah.
So which one follow which one first? Crude oil follow or palm oil follow?
That's a very good question. So there's a question here from the audience. Is basically, there's a relationship between crude oil and palm oil, whether which is leading which. Is it crude oil leading palm oil or palm oil leading crude oil? Now, obviously, if you just look at the whole commodity basket, crude oil is like a king, because everything that is tied to commodities, as long as crude oil has bad sentiment, it will affect the rest of the commodity. So there's a tendency for crude oil to lead the show. But again, palm oil also has own fundamentals. Because the fundamental of crude oil and fundamental of palm oil, although they are both commodities, they also have different fundamentals. Crude oil is a widely traded product. Everyone needs crude oil. Palm oil, as a matter of fact, it is as well. But the dynamics of it is totally different. So I would say there's certain instances where the crude oil will have more dominant play compared to palm, which means that crude oil at certain point in time can lead palm oil in certain ways. But in general cases, actually both of them, they tend to move slightly different ways. Because again, palm oil has a lot of its own fundamentals to be worried with, and crude oil is just an external force. So obviously, if you're really bearish in palm oil, and you have another bad sentiment in the crude oil market, it will further push down palm oil prices. But other than that, I don't think it will be leading that role. So hopefully that answers the question. Trent from the online.
Okay, there's one question here. What are the factors that drive front month, the mid part, and also the back part?
Wow, this is a very good question, and it's also a very tough question to answer. Now the front month, basically in CPO market, we always refer to December, January, February. The coming active month for CPO market is going to be January contract next week. So what affects it is very simple, the fundamentals. So why CPO structure has been like this? Because every MPB report, we start to see bearish news, higher stocks, higher production. So obviously that will affect the front month contract. Now, how it affects the mid and far month, that again depends on view. So, if you're someone that believes that, this supply situation next year is going to be bad, whether it's because labor is still shortage, fertilizer is not being applied properly because certain planters are cutting fertilizer because it's too expensive. This will all affect midterm. So that will also obviously change the midterm outlook. Then longer term will be, whether, there's a lot of factors that can affect longer term. So it all really depends on the view. But what matters is the fundamental play that at that point in time. So right now, if you just answer that question, is the factors that can affect near terms are usually the fundamental factors, especially when it comes to production, stock levels, demand. The medium term, longer term picture is more towards like government action, government policy. Just take for example Indonesia. If you recall, this time I show you a chart on Indonesia. Indonesia, they decided to do proper ban of palm oil. You know how that affected the market? I think the market was shocked. Imagine the biggest suppliers say, hey, I no longer want to produce palm oil, a ban from exporting. If you are like China, you suddenly say, hey, there's no palm oil to buy. That is bad, And how will that affect? It definitely affects short term. It also affect the medium term. But once the stock levels start going historical high, Indonesia reverse that decision, and that also have a short term and medium term impact. So that's how one can see whether you want to see factors that can affect the short term, medium term, and longer term. Ultimately, it's still down to fundamentals. Yeah.
Okay. Basically, that's all from the online question.
Sure. Yeah. Great.
Based on all the criteria you show, right? Can I say that you have a more bullish view in the coming 1 or 2 months based on like seasonality and spread between the soy oil and CPO?
Yeah, that's a very good question. Thank you for the question. Now, if you base on what I just mentioned, the factors I highlighted, by right now, the fundamentals of palm oil should look rosy in the coming weeks or months, at least for the next 2 months, because you look at seasonality, production is coming down, stock levels probably will be flat or start to come down. These are all good news for the prices, but we don't see that in prices. In fact, prices move the other way around. So there is a lot of elements that is into play, or rather factors that's not being, which I didn't mention, that has a bigger play when it comes to prices. So ultimately, like I said, we use fundamental as a view, but when you trade where the price is. So as long as the prices are telling you it's still on a downtrend, again, be with the trend, which is try to trade on a downtrend basis until there is a clear direction. Prices are showing you there is sign of bottoming. That's where there's a possible change in trend, and you have to accompany that by fundamentals. If stock levels are coming down, production is coming down, it's very likely there's a bit of support in the market. So for me, I think based on fundamental wise, by right, prices tend to be a bit more supported next coming weeks or months. But really, I think it's all down to prices. So that's the hallmark of it. Basically, when you trade with the price. Yep. So any more? If not, I'm going to hand it over to sure.
Judging from past historical prices, there was a time palm oil prices got down to sub 2,000 per ton.
Yeah.
So how does spread calendar perform during that time?
Oh, very good question. I reckon probably you've been dabbling with calendar spread. Yeah. If I recall correctly, there is a period of time where this at the peak of COVID-19 pandemic, if I recall correctly, probably you can check with the chart. It did went below 2,000, the outright contract at that point in time. And during that time, the spread contract, calendar spread, especially the active month, at that point in time was trading like where we are right now, minus 40, minus 50 is a negative spread.
It will not go down to a negative 100.
I would say it's impossible. It's still possible, but that's very bearish. That means it tells you that the front month contract is putting at a heavy discount compared to the next month, which is very unlikely in certain scenarios, because you must understand, physical guys who are in the business, who understand this, who understand the structure, they'll come into the market when they see opportunity and they arbitrage against you. So I would say, these guys will always put a floor. No, what I'm saying is that ultimately, there is a fundamental tie to it. But having said that, during that point in time where price dropped below the 2,000 ringgit mark, calendar spread, if I recall correctly, was actually doing negative. It's probably around what we are seeing right now, is minus 40, minus 50. But once the fundamental starts to shift, the trend of the outright price starts to shift, calendar went back to positive. So that's why it's important for us to watch out the market structure of the market itself, be it in palm oil market and the soybean oil market as well. Okay, so whether you're trading palm oil or bean oil, watch out on the calendar, the structure of itself. Okay, over to you, Trent.
Okay, thanks, David, for a wonderful presentation. We have just want to highlight 3 things. First of all, if you wish to know more on how to open an account, okay, you can speak to our representative. Basically, you want to know about what's the margin, what's the commission rate, or you want to know more on other products and services, you can speak to our representative out there later. And after this, we have hiring dinner. Okay, dinner we serve buffet dinner, so later you can enjoy it outside. And one more thing, I would like to invite everyone to our branch opening again on tomorrow, 9:30 a.m. So we were having a series of talk on various product services and market outlook as well. Okay, Malaysia and global market outlook. Okay. And lastly, there's one feedback form in the back. Okay. You guys can fill up. So just give a feedback on the seminar so we can improve our seminar in the future. Okay. So basically that's all. Thanks for coming. And we hope to see you again on the physical event next time. Thank you.
Yes, what questions? Yes, came in,